Joining us now for more on the market, Sarat Sethi, the DCLA managing partner. He's also a CNBC contributor. Sarat, great to see you. We're practically at record highs.
Yeah.
Are you finding value or are you paying up at this point?
If you separate the market from the AI trade, I think you can definitely find opportunity and I would say a value of areas that have not performed, whether it's because there's an administration overhang or fundamentals really haven't caught up yet. So I do think you can deploy capital. It's just one of those areas that you're going to find that are value plays, and value just hasn't worked in the last few years, but I do think there's opportunity there.
It does seem like there is a pickup in some of the stocks that have been undervalued relative either to themselves or to the S&P 500. I mean, even within financials, which have been overall a great performer this year, close to record highs in terms of the money center banks. Yesterday, we saw a very interesting divergence in performance with the larger banks moving lower and the regionals picking up. So even within sectors, there's sort of this value rotation going on.
And I think if you touch on financials, I think one of the things looking forward is, look, if rates do get cut, where do you want to be? And you probably want to be where NII is not going to get hurt, and you want to be where M&A is going to pick up and deregulation is going to get better. So at Morgan Stanley, that's 60% wealth management, under earning in M&A, trading at 15 times with a dividend yield of almost 3%, which, by the way, the banks just grew them, for Morgan Stanley was up 7%. So within those sectors, there's also value. And then you look at other sectors like commodities and basic materials, and you saw a pop yesterday, and you've got companies like Air Products and copper. So Freeport-McMoRan, which did well yesterday because of the potential of tariffs. However, we haven't built a copper mine in 10 years.
Right.
And commodities are priced in dollars. So if dollars are getting weaker, the demand for commodities will get higher. So there are opportunities. Fundamentals will catch up to these companies. And I do think you can put capital to work. But, there's so much money that goes after the AI trade that I think you have to have a longer term view and not say, hey, what's this going to do in a quarter or two?
Right. I understand that you like the fundamentals for Freeport-McMoRan, which it wasn't just like it was a one-day pop yesterday. I mean, this is a stock that's been on a steady climb higher, basically. And so I'm wondering, how much more of a tailwind could this tariff be? I mean, we saw that. We've seen it in copper prices this year, pulling forward of demand, bringing copper to the United States in anticipation of a tariff.
So Freeport's done well, but it was $50 a year ago. So it still hasn't caught up to its peak. So it kind of sold off in the fall. And I think the earnings have to catch up. The copper prices, the LME, have gone up much faster than the stock prices. It's kind of like when you play the energy trade, some of the energy stocks don't do as well. So I do think you have to look at that, look at the balance sheets of those companies as well. And I think the copper demand is just going to be so much higher, not just for industrial uses, but for technology uses. And we just haven't replaced it for a long time.
Energy is another area of the market that has not done well. Oil prices, of course, are lower. OIH had a great day yesterday. I'm just wondering, are you finding value in this area?
So one of the places we play in is oil services, so Schlumberger, which has been out of favor for a long time. But 30% of their revenue now is in digitization and using technology. So I think there is value. It trades at a little over 10 times earnings. You get a 3% yield, and investors have kind of shoved that sector away. But I think you're going to find we're not going to not drill for oil. So you want to be in the areas that we have secular demand for.
What do you think of where we are in the rally and in terms of your value plays? Does everything come down if the markets move off of record highs?
I think, and that's what we've seen for the last couple of years. When money pulls back, value has not sustained kind of what the defensive posture. I mean, you look at staples and utilities, and some of them have not done very well. So I do think when money starts coming out, it does. But I do think if you get rates coming down, you get a slowdown in the economy, you can be in some of these defensive cash flow sectors that have growing dividends and revenue growth. So if you get top line revenue growth, you have valuation sustaining you. And I think you can then get that tailwind to actually outperform the market and not just be in the AI trade, which is getting more and more expensive because more and more money is chasing it.